last video we recorded retracements, how to locate this one. We're doing how to execute, baby. Let's get straight into it. No time wasted because we just finished recording the last one. Oh, word! Whoop, 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 boom, 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 boom. Okay, that was time wasted. I didn't know that was a feature. Anyway, let's get straight into it. Bam. We're going into how to properly execute off of them, scaling down, getting sniper entries, everything of the sort when within retracement tools. You guys know, typically I'll tell you, just scale down, but there are certain times, and you need to figure this out within your own trading strategy. When are you looking to execute off of these certain price ranges? Are you looking to execute right as price retraces immediately into these fair value gaps? Are you going to have a set SL, an adjusted SL with overall price action? What are you going to do? Are you going to always keep it below lows and highs? What's your plan? Figure that out when going into it. And I didn't even say it. If you have not watched the last video, first link in the description. If you haven't watched the daily buys video, second link in the description. And if you're not in the Discord, join the Discord. Bam, can we pop that up on screen? Hopefully we can. But join the Discord, link in the description. Everything, all links are in description. But anyway, getting into it, let's get going. Bread and butter. This is what we do. We don't waste time, baby. We're wasting time and yapping right now. Let's get into it, okay? Okay. So, last video, if you didn't watch it, go watch it in order to get an understanding for this video. We know what we're looking for within price. We're looking to follow and to trade the retracements that follow overall trend. In this example, what are we? We're bearish, okay? Why are we bearish? Daily came up, took out highs, 4-hour chop, broke structures to the downside, 1 hour follow with that. So now we know we're bearish. What are we looking to execute off of? Bearish retracement tools, selling retracement tools, continuing to the downside right here. What do we have? Let's turn the magnet on. What do we have? From the price range of 208393 to 207813, this is our fair value gap. This is our price range where more sell orders are able to get filled. So how do we execute off of this? How do we probably go in and execute off of it and not get stopped out? Because I've had times where we'll show a good example and then we'll go and show a bad example, and then we'll go and show my own personal journal. Even though both examples are right here, I'm actually looking at both on the chart. Even though I went in and did my own technical analysis and journals on this, I'm going to go show you guys that too, because I want you guys to be able to learn even from my journals. So let's get into it. Here we see price action retrace into it on an hourly time frame. How could we have executed on this trade? Of course, everyone knows by going in. Oh, this is our back testing. Okay, we're back. I lost the chart. Anyway, here we see price retrace back into it. What do we do? What's the first stop? Bam, scale down to lower time frame. See what we're doing on the lower time frame. See what we're retracing for. Here we have a macro 1 hour retracement with within a 15-minute fair value gap retracement as well. But not only on top of that, we're taking out these 15-minute highs for liquidity. Bam, we have liquidity residing above these highs. So scaling down. This is all it is. Scaling down onto a lower time frame. What else do we see? Well, now we see price action chopping. What do we see here? Finally, price action breaking 5-minute structure to the downside. And if you even wanted, you could have waited for this 5-minute fair value gap to get invalidated before looking to enter for extra confluence. But here, we'll enter on the break of structure right there. Now, this is the part that is very important, and I will always emphasize this. Having a validating SL. You guys hear me preach about this, and I will always preach about this. If your stop loss is not placed within a validating location, a validating point in price action, and you get stopped out, you will never know the reason why. You must have a validating stop loss, meaning when price surpasses this price point in price, my entire trade idea was incorrect. Not, oh, my bias was kind of incorrect. Oh, it should have done this. No, your entire trade idea was wrong. In the bin. Trashed out. You're not profitable. We're not profitable. We're trash. Liquidity. We're free liquidity. That's what it means. That's what your stop loss needs to mean. Yo, I was free liquidity. Oh my gosh. Okay. There you go. That's what having a valid stop loss means. Please have a valid validating SL. Please, I cannot stress it enough. That is the best and only way to learn, because if you're getting stopped out for any reason, you never know why. You need to be able to pinpoint your reasons to why you're losing trades. I always emphasize that to the people within the Discord. Figure out why you're losing trades. Oh, I don't know why I'm losing trades. Well, show me your SL. Oh, where do you place your SL? Oh, I place it anywhere and I get stopped out. Maybe that's why you're not placing it at key levels to understand and let your trade play out. Being in drawdown is not bad either. Allow your trades to play out. Give them breathing room. You don't need a 2-pip SL. No, give your trade breathing room. Anyway, getting back into it. Here we have our validating SL. For me, I do have a set SL of around, on gold 3 pips, so but I use the point percentage, around a 0.17%. All the time, that is my set SL. And so I make sure my entries are pinpoint and accurate in order to keep a validating SL. What does this mean? Well, here at this breaker structure, if price retraces, that means this entire liquidity sweep we mentioned was not valid. And on top of that, the retracement we entered based upon, we entered too early. Of course, extra confluence with this, we would have waited for 1 hour to reject off of the 50% mark of the fair value gap from here to here for extra confluence, and waited for that 1 hour candle close before actually looking to enter. But there you go, scaling down in time frame. Bam, we execute on the 5-minute breaker structure. Now we go in and we target lows. What lows do we target? We can target hourly lows. Why? Because this is hourly retracement. Bam, we can target lows right here. What can we target after that? Bam, we can target lows down here. Draws liquidity. And that could be our two take profits here and here. And why here and here? Because here, you see, if you guys seen it, bonus points if you spot it, we have a buying fair value gap that we could have had the opportunity to fill more buy orders back to the upside if price needed to. And so during those times, you don't want to take that gamble. You don't want to take that risk of, okay, do you think we have enough momentum to push through the fair value gap? Take your profits or set your stops to break even and then see how the trade plays out. Here you can see we push back to upside before continuing back to the downside, retracing into this order block. You got it. Why is it a order block? Because here on the line chart, came up, took out this high, both of these highs continuing to the downside. Also called a fake out. Anyway, what do we do there? Then we go down. Same thing. Same time frames. Okay, 15-minute. Let's see what happened. Wow, we broke 15-minute structure to the downside. Let's go in 5 minutes. See what 5-minute did. Okay, 5-minute did the same thing. Did we see any retracements? Wow, we got a 5-minute fair value gap retracement right here. Okay, cool. Fair value gap. 1 minute. Let's scale down even further. Where could we have seen an entry on this fair value gap retracement? Why? Because this is liquidity sweep, taking out these micro highs. Bam, with the breaker structure to the downside. There's a multitude of breaker structures, but we'll just plot this one. Bam, breaker structure to the downside. Execute. Bam, throw your stop loss above highs. Continue to target lows. Bam, you figure out what lows you want to target based upon time frame. For me, it would have been 15-minute because we're looking at a 15-minute retracement and a 1 hour retracement. Those are the time frames I would have set my take profits on. Bam, just like that, you get another entry in. We could do these examples all day, but now I want to go into what is an example of something that may be a little more tricky. And this right here. Lonnie, the video is going to be past 10 minutes. Boohoo, they're all past 10 minutes. I wanted to keep them under 10 minutes. So, but, we can't do that. But this is an example right here. With knowledge and content that I'm teaching you guys, these are some nuggets, bro. You guys better be taking notes. Because I need to go in and watch my videos again and take notes. But anyway, bam, we have an overall fair value gap right here. In these examples, you see, okay, we made a nice retracement. Made around a 50% retracement. This one, we made 110% retracement. We surpassed the fair value gap. What would you do in a scenario like this? We surpassed it, but we still validated it. You wait. I found, and the secret I found from going in and comparing the two, is the difference between the individual that's actually able to go in and execute and not get stopped out, and the other individual that goes in and executes and gets stopped out is their patience level. How patient are you with price action? How long are you willing to sit there and be like, you know what, I am going to sit on my hands like this and not execute until I have a clear understanding of what price action is trying to tell me. In this scenario, we did see a retracement for this fair value gap, a very, very deep retracement for this fair value gap, but it's still being validated. So what should we have waited for? You have to remember, on these wicks, at one point, this candle was bullish. So at one point, it appeared that yes, price action was rejecting. Remember, that's during rejecting off of the 50% mark. What should, in this sense, we have looked to do if we were trading this? To have waited for the candle close, just like this one, this trade example, validating our trade idea. Wait for your candle, breaks of structure and closes and all of the sort. It will help and increase your win rate so much. I promise you. I'm not saying this just to see you get stopped out. I mean it. So now, what could we have done? Bam, if we would have waited for the candle close at 7, we would have understood. We still validated this fair value gap, having an opportunity to execute off of it. Why would we look to execute it off of now, Lonnie, instead of, how do we know when? This is when you know when. When your stop loss is now at a validating enough spot to get an understanding that, okay, we made our overall push past the fair value gap and we still validated it. If we continue to pass it and surpass it, that means maybe my bias was incorrect. Or maybe I made a mistake of not waiting for price action to fully develop and get an understanding before I execute on this trade. Your stop loss means the most. Now you see why I emphasize it. So what do we then do here? Okay, 7 o'clock candle close. Bam. See the fair value got validated. Okay, we have a 5-minute imbalance. What are we looking for? What could we have looked for? Okay, we could have waited and looked for price action to make a retracement, a break of structure to the upside, some sort of 5-minute break of structure on a lower but significant time frame. Typically, you could do 5-minute or 1 minute. I probably would have done 1 minute. For extra confluence on this trade, I would have done 5-minute. You're waiting for the time frames. I can give you as much confluence as possible here. Price action came down, retraced back into the 15-minute fair value gap, then eventually broke 5-minute structure to the upside. You're doing the exact same thing, just scaling up, baby, and having the patience to wait for price action to fully develop. And bam, on that break of structure, look where your entry would have been. Me, I have a set SL. Look at that. It would have been at a perfect location, validating price action. You would have targeted hourly highs, and you would have been good to go. Bam, multiple take profits. 1 right here. Bam, take profit 1. Or no, take profit 2. Take profit 1. Take profit 3. Bam. All TPs hit on this trade. Why? Because you were patient. The key I have found in order to understand how to trade deep retracements like this is 2 things. 1, having the patience to allow price action to play out, to wait for the candle closes, to sit there on your hands and not trade until that happens, until you get full confluence. And 2, having a validating SL, a validating stop loss. That means when price surpasses this point, my trade idea was not valid. Those 2 things paired together allows you to execute on fair value gap retracements, deep fair value gap retracements. Some people will call fake outs or even liquidity grabs through the fair value gap, such as this. So those are 2 examples, and I'm going to drop you guys with a little nugget with my own personal journal. Drag it here. I don't know if you guys could see, but we have my own personal journal right here, my Notion journal. And I have the 2 examples, improper retracement execution and a proper retracement execution. And these images are based upon the 2 trade setups I just showcased to you. If we open it here, bam, we have the 1 hour. Okay? You see that? Then, what else do we have? Let's go here. We'll also click on this 1 hour one. Bam. 1 hour confluence. We'll actually go on 15-minute, and bam, right here. Would have waited for the 15-minute execution close. All of the story. You guys can go and pause it, read everything if you want to. But that is an example of going in and figuring out, okay, why and when are these still applicable to trade? Because I went and I realized I'm missing opportunity by not executing on these. So let me go in and backtest and figure out how to execute off of them. Go in, do the work, figure out how to execute on what you need to execute, because oftentimes when you sit there and you're lazy and you're like, oh, I'm not going to do it, you miss opportunity within the market. Go in, do the hard work. Episode 4 will be released shortly. That I cannot tell you guys what that episode will be about, but it's going to be a juicy one. It's going to be a great one, so stay tuned for it. Remember, if you haven't watched the other Money Printer series, link in the description. Everything's there. Have the playlist, the daily bias video, the last video to this video. And if you're not in the Discord, join the Discord. I love you guys, and I will see you in the next one. Hold up.